Welcome back. You're still watching Countdown with us, and just 22 to 23 minutes to go for markets to close. And Nifty is turned negative. It's trading with cuts of almost 13 to 14 points right now, inching very closer to the mark of 11,700. Remember, the range we've been talking is between 11,650 to about 11,850 on the upside. But whether we'll breach the 700 mark in today's session remains to be seen. But Bank Nifty still going firm, sitting with gains of almost 0.9%. Nifty Realty is one index which has seen gains of nearly 2% in today's session. A lot of stocks among the Realty pack. One of them we've already discussed, that's DLF, which is up 3.5%. Besides that, you've also got something like Prestige, which is up 4% in trade. And of course, Suntek came out with strong set of numbers, post which we've seen strong moves coming in for that stock. But the broader markets, which have been feeling the pressure, selling pressure, in fact, in the last few sessions, continue to trade in red. The mid-cap index is now just about turned flattish to mildly in the red territory, down 2 to 3 points. Let's just pull up the market breadth. That gives you a better indication of the entire listed universe, at least on the exchange. Right now, it's clearly in favor of the declines. 2 to 3 is what we're seeing as per NSE's stats. But what are the stocks which are moving around in today's trade? We'll find out in a while. In fact, we've got Yash there joining us to take us through his list of Fab 4 stocks. Hi, Yash. Good afternoon.
Good afternoon, Navneet. I'll start first with Blue Star, and they came out with a decently good set of numbers. Their revenues have grown 18% year on year to nearly 1,600 crore rupees, more than doubling of their net profit to now about 70 crore rupees, as well as a margins growth of about 7% versus 4.5% in the same quarter last year. So all in all, a good set of numbers. The stock has come up from the day's highs, up about 2.5%, but it rallied more than 4% at one point in today's day of trade. Watch out for Ircon International as well. It's received a big order worth close to $91.5 million from the Sri Lankan government for the upgradation of its railway tracks. Now, this is a follow-up order to which the company has received earlier as well. So a good order pipeline for the company, which is a key positive. Diwan Housing is in focus today, up 5.5% on the back of high open interest buildup of more than 25% in the May series, which indicates that most traders, they are taking long positions in the counter. And lastly, watch out for Kotak Mahindra Bank. The Nifty Bank Index is up about 1% on the back of strong gains seen in financials in today's day of trade. Kotak Mahindra Bank had hit a fresh lifetime high as well in today's day of trade, with volumes too coming in considerably higher over its 20-day average. Back to you.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks of the day. Before I bring in our next guest in the show, I just want to pull up the chart of Eros International. There's been a sudden fall that has come in for this stock. It's in fact trading at 52-week low. It's touched its 52-week low. There you go, 12% lower, and just a mild bit of recovery from at least the lower levels, which was somewhere about 56.5. Currently, the stock trades around the mark of 60. Very quickly, any view here?
So look at the volumes. I guess it's highest in like months that the stock is going down in such huge volumes. Surely stock is headed to much lower levels of 50. Wouldn't want to trade the stock at all.
Okay. On the flip side, you were referring to Federal Bank, if we haven't spoken about it already.
Yes. So Federal Bank has seen a sharp surge moments from now, and that has been backed by extremely healthy volumes. So at current levels of 97, one can take a long trade in this counter for targets of 102, and if somebody wants to hold on to it for about 2 to 3 weeks, stock can test levels of 105. Will place a stop somewhere around 94.5 to 195.
By the way, TCS is down 4%, 2127 and counting. So keep that stock at the back of your mind. And the other one is Z. It's down, not much, but just look at the pattern that Z is following. It goes up to 430, 435 or thereabouts, and then cools off to 400 from where it sees buying. If you look at the last 1 month chart, you will see multiple attempts by Z to cross those levels, only to come back. And then it again bounces off from those 400 odd levels. So just keep that at the back of your mind when you're looking at Z Entertainment. But the broader market's a lot more active. Mayuresh Joshi of Angel Broking joins us right now with his thoughts on the markets and on specific stocks. Mayuresh, actually heard something about Eros International. That stock is down 11.5%.
Nothing that I've heard, Neeraj. No views on this one.
Okay, any views on McLeod, Everready? They were looking like they would bounce off today after 2 days of carnage, but somehow that has been very short-lived.
Seems to be the case, Neeraj. And again, I think when you're probably talking about a whole host of issues surrounding liquidity and the allied factors, I think there it becomes very, very sticky. So again, I think you probably need to just understand the developments that are happening on a bunch of stocks related to this group as well.
You know, the other interesting one, of course, that you heard the management of is Intellect Design Arena, but it's down about 5%, despite the reported numbers looking marginally okay. Mayuresh, did you look at the numbers of Intellect Design or any of the other mid-cap IT companies? Now they've started coming out.
So I think one really needs to be a little bit more specific in this space. And though I think the revenue growth, both in dollar and constant currency terms, have been quite reasonable, I think the outlook going ahead is going to be extremely critical, because I think every mid-cap IT companies has a niche product stroke service to offer. Again, digital as a percentage of the revenue is revving up for these companies. And at the same time, I think the kind of order wins that they're probably winning, whether it's the $1 million or $1 million to $5 or a $5 to $10 million bucket, I think that order flows are still trickling through. The interesting aspect here is going to be how the earnings profile is going to stack up vis-a-vis the execution that they do and how they are managing attrition at this point of time. So again, I think selective mid-cap IT companies, in my opinion, will keep on doing well. A few companies have disappointed with numbers coming in, but a large element of what we probably own within this pack still continues to be stocks like NIT Technologies or a Nucleus Software.
Okay, Mayuresh, stay on with us. Let's talk about the housing finance companies. We may have seen some bit of recovery when it came to stocks like Indiabulls Housing and DHFL in today's trade. But there are two reasons why housing finance companies have faced the downgrades in the recent past, according to Ashish Gupta of Credit Suisse. Let's listen into what are his views on this.
Discomfort and the rating downgrades that we have seen have originated on two accounts. A is the wholesale exposure of the developer exposure that has been added to some of the HFC books. And second is liquidity issues that are there in some of these HFC books, right? But as regard as the individual mortgage businesses, I think that continues to be proven time and time again to be one of the safest assets in the banking system. So I think going forward, one learning people might have to take from this is that even if HFCs is 75% retail, 25% corporate, you have to see it as a hybrid rather than entirely as a mortgage book.
We thought we were done with most of the cleanup, and now there are a whole bunch of, okay, not very large, but still, you know, the 3 or 4 assets which you pointed out in a subsequent report which are creating problems. Yeah.
Oh, so definitely there are some of these additional stresses out there. But I still think that unless we have an accident in any NBFC, the total trajectory should still be downwards. Many of the assets that we are talking about, many of the stresses that we are talking about, fortunately or unfortunately, are not exclusively exposure of banks, right? So their exposure of NBFC, their exposure of mutual funds, etc. So not necessarily banks are as impacted by these as were with the some of the exposures 3-4 years ago. So unless banks get impacted because of some NBFC facing an issue, I don't think our overall trajectory of NPA reduction for banks should change.
So that reduction continues.
Yes.
Recoveries, I mean, you've been tracking IBC also very closely. Yes. It's not the best case scenario that people had hoped for, surely.
No, I think last few months have been a big disappointment. I think whether it's on account of infrastructure constraint or some inconsistency in how the IBC has been interpreted and some of the orders given, there's quite a discernible slowdown in the pace of resolution. So I think recoveries continue to be a challenge.
Okay, that's some commentary coming in from Ashish Gupta of Credit Suisse. Mayuresh, I'll pose the same themed question to you regarding NBFCs. Do you see these liquidity pressures continuing in the coming quarters as well, or do you see them easing now?
So Navneet, I think the liquidity pressures that are there in the system at this point of time, I think they might continue for the next few weeks, but it should start ebbing off over the next few months. So a large portion in terms of The disbursement slowness that we've probably seen, that is probably because of the macroeconomic conditions at this point of time. The second element is the readjustment and the resetting that a lot of these NBFCs had to make internally. So I think their asset liability mismatches, how their ALM program was across different buckets of time, needed to be realigned. And you've probably seen a whole host of activity actually happening. A lot of companies probably cut down their CP exposure significantly, and the kind of borrowing mix that we once see has now probably largely stabilized. The third element obviously was because of the borrowing mix changes that were probably happening and higher yield curves. You're probably seeing the NIMs and spread probably compress along with dampening conditions. And the fourth element obviously was the asset quality pressures. So I think both gross stage 3 and the net stage 3 NPAs for better rated corporates obviously have come down. But I think the PCR requirements and the need to recognize higher provisioning on their balance sheet also probably takes away from the pre-provisioning profits that these companies report, as well as the bottom line. So I think the return ratios do take a hit. But again, I think the liquidity conditions should ease out over the next few months. And the better rated corporates, as I've always maintained, with better capital adequacy, lesser leverage, and the expectations of asset quality pressures, which have ebbed off even in tough times, I think these NBFCs should stand out over the next few quarters and years. So being very, very selective, I think selective NBFCs within this entire sphere should continue doing well, though I think their performance might be a little bit subdued along with the whole pack over the next quarter or so.
Okay, stay on, Jaman. It's time to take a look at what dealing rooms are recommending in the session today. Darshan and Yatin are here with their channel checks. Good afternoon, both of you. Darshan, let's start off with you first.
Yeah, so one of the stocks that's been spoken about is Jubilant Foodwork. Over the past few days, you've seen heavy selling that's coming into the consumer names. This time around, obviously, Jubilant Foodworks will take some time. The results are there on the 15th. But the numbers among the dealing room do indicate that the SSSG growth will be lower this time around than what the street is anticipating. It's trading near the day's low, so that's been spoken about on Jubilant Foodwork. The other company that's been spoken about is RBL Bank. Now it's up in trade, but some of the HNIs are taking exits at higher level, and the concern that they have is the bank's exposure to the BM Khaitan Group, which actually owns Everready as well as McLeod Russell. So that concern seems to be there, that some part of it probably may turn NPA. HUL will come out with numbers today, and as we've seen the case with the consumption pack, the dealing rooms do believe that the numbers will disappoint this time around, and they expect a weak commentary from the management this time. But Yatin, what are you hearing?
Darshan, pharma stocks and a few auto stocks in focus. Cipla is one stock wherein dealers do indicate that at lower levels a lot of domestic funds are buyers in trade. In general, we have seen IT pharma being soft in trade today, but Cipla is one stock wherein dealers do indicate that it's domestic fund buying at lower levels. Also, Escorts is another stock wherein dealers do indicate that at the current levels, a lot of HNIs are short sellers in a few of the auto names, including Escorts. They are probably expecting some more trading downside as far as this name is concerned. And finally, Siemens is another stock wherein dealers are recommending buy today, sell tomorrow kind of a strategy based on the F&O trends. The stock is up 2.5%, almost 2.5 lakh shares traded as far as this engineering company is concerned.
Okay, Darshan as well as Yatin, thanks a lot for bringing that dealing room check. But let's also get you some closing strategies going from our technical experts. Aditya, let me come to you first. Any BTST or any STBD for Monday's trade?
I would stick to Federal Bank. Stock is definitely showing some strength despite the fact that markets have given up their gains. So at 97.5, I'll go in for a long trade. Targets 102, 105. Put a stop at 195.
Shubham, what about you?
One sell idea, and that will be on Balkisma Industries. And I just spoke about Polo Tyres some time back. And if you look at this entire space, that's witnessing further sell-off. So Balkisma Industries is a sell for a target of 875, and a stop loss can be maintained at 920.
Shubham, I'm not asking you if you would trade this or no, but HUL ahead of the results, and it will probably have some gyrations Monday morning. But what do the charts or the F&O positions indicate about what it could well likely do?
If you look at HUL, yesterday ITC was doing well. Despite that, we saw that HUL was there in a selling pressure. And it was very obvious that, today we will see a continued sell-off coming in. And if you look at the options data, 1700 has the highest put congestion, and, the closing for the day is happening around that level, which is again a negative point. So I think ahead of the result, if anyone wants to actually go and trade this, we can't really trade with options because there'll be a lot of theta decay over the weekend, and the volatility is also very high ahead of the result. So a trade on futures on the short side can be initiated, but one will have to maintain a stop loss strictly at 1725. And on the downside, I feel that the previous swing low, which was around 1660, that might get retested. So ahead of the result, the strategy would be to go short, and 1660 will be the target to expect.
Okay, watch out for those levels on HUL in case if you're executing a trade just ahead of the earnings. Pull up Ruchira papers, that stock's gone up in trade. In fact, throughout the session, I guess that's seen some buying momentum. And I think there were some companies, paper companies, which reported their earnings from Orient Paper to International Paper also. And the earnings looked pretty good. Mayuresh, have you tracked this space? Because there's some margin expansion which has been seen for both Orient as well as International Paper.
No, so the space looks interesting, Navneet, and largely when you probably look at the demand supply dynamics at this point of time, it is favoring the paper manufacturers. Now there are a variety of papers that get manufactured, and the normal expectation is at least 8 to 9% growth in line with what the GDP might deliver over the next few years. The second element obviously is the input costs, and input costs have moved lower. At the same time, I think the paper realization prices seem to have moved higher with hikes undertaken, which means that the margin expansion and the sustainability of margins probably looks to be far more sustainable over the next few quarters. The third critical element probably is the requirement of water resources, because water is a key element, and if there is any shortage of water, if the monsoons are probably delayed or otherwise, I think you might see some amount of issues cropping up for these companies. So I think that's the only risk factor that I'm probably looking at this point of time. But I think a whole host of companies have probably done backward integration in terms of bamboo plantations to secure the raw material. The companies using agro-waste material like bagasse, I think they're in a far better position in terms of lower costs as well. And a lot of companies have also built in water reservoirs. And again, I think the leverage on the balance sheet of a few companies is quite commendable, which means that the volume-led growth with all the plastic bans, the expectations of paper usage increasing because of retailing revenues, should prop up volumes and realizations. So I think I remain extremely positive on the sector. We continue holding on to stocks like JK Paper, Orient Paper in our portfolios.
Okay. What's the best large cap private sector bank to initiate a trade on right now, Aditya? Has 6 minutes of trade left. What would you do?
I will go in for an Axis Bank stock
long
at current levels of 757, a long trade for targets of 785. Put a stop somewhere around 740.
Okay. Mayuresh, one name in the large cap private sector banking name that you would buy. One.
So not necessarily I'm buying, but I think I continue holding on to a stock like an Axis Bank because the numbers probably have been very, very good. What you probably expected to see in terms of advances growth, I think that should be quite reasonable as well going forward. The NIMs should get maintained around these levels and gradually improve. At the same time, I think the retail share in terms of the overall advances has been growing steadily. The retail pie in terms of the fee income growth also probably looks elevated and at sustainable levels going forward as well. And again, I think the cost to income ratio should start inching downwards. Our own sense is that the entire stressed out book, BB rated and below, which stands around 7,400 to 7,500 crores, even that should start coming down slowly and gradually, which should give confidence in terms of the asset quality related issues that the bank has faced in the past. So my own sense is that a combination of all these factors are going to propel the ROEs, the exit ROEs that the company is looking at over the next 2 years is achievable if they probably embark upon the targets that they have set. So yes, I continue remaining positive and holding on to Axis Bank in my portfolios.
Okay, Mayuresh, we'll leave it at that note. Appreciate you joining us today and taking us through your views on the markets. Have a good weekend. Okay, pull up Cadila Healthcare. That stock stumbled nearly 4% in trade. It's also touched its 52-week low, somewhere trading around those levels of 302. And well, it is also on the derivative side. So pull up the futures. Though on the cash side, the volumes are definitely higher compared to yesterday. And as you can see from the intraday chart, the sell-off has come in just in the second half of the session. The futures are also indicating there is some fresh shorting taking place here. Shubham, would you take a bet on the downside? Down almost 5% now. It's breaching the 300 mark.
There was a bit of audio disturbance. If you can just repeat the stock name.
Cadila Healthcare.
So Cadila, if you look at the movement now, I think we had a lot of short positions here, but the target for that is done for now. So 305 was roughly the previous swing low as well. And I believe that, today what we are witnessing might be a, final round of selling, and then again a pullback can happen, even though the longer term trend is still declining, which might continue. I feel that if anyone is holding shorts, this might be the right time to actually book profit and sell it again on pullback if it moves above 315. So for now, book profit from short, and if a pullback happens later, then we can again review for the short position.
Okay, gentlemen, stay on. We'll start wrapping up the markets. Well, the Nifty Bank at 233 points is in the green, but we are off the highs of the day for all the key indices. These two in the red too. They were up about 0.4% when we started the show at 2. So there's been about a 0.5% downtick. I reckon that the market breadth, which was anyways not the strongest, would have probably weakened a bit more too. We'll get to that in a bit. The mid cap and the small cap indices, flattish, but I reckon that the market breadth would have worsened. As I said, we'll just talk about that in a bit. Let me first talk about the large caps, and Navneet will bring you up to speed with what's happening at the broader end of the spectrum. India Bull's housing 3.5% higher, top gainer, no apparent reason, but doing well. NTPC about 1.5%, Bharti, ICICI Bank, Yes Bank. Most stocks that have gained today have gained without any strong reason backing them. It's been at that kind of a day on the large cap space, very little news flow. What about the mid caps, or what about losers, excuse me? There has been enough news flow. So IT's corrected, TCS, Tech Mahindra, HCL Tech, etc., all of them down, courtesy Cognizant. We have Britannia out here down for a second day on a trot. There has been weakness in HUL ahead of its numbers, courtesy what's happened to volume growth numbers from across that space. And somewhere down there, Ultratech Cement takes a bit of a breather, down about a 1% kind of a move in the session today. What about the broader markets, though, Navneet?
Well, Neeraj, the picture looks the same what it was in the last few days. It's just that no major sell-off seen in today's session. Let me start off with a couple of gainers then. Merck Electronics, a small cap company, but did see some buying interest in today's trade. Well, that's a nifty mid-cap. Merck almost rose 17% in today's session. As you can see, it was the stock, however, is not that liquid, I believe. Uniply Industries is the other one, which was locked in upper circuit with gains of nearly 20% today. And also something like Indigo, that stock's been quite active in the past few sessions. In fact, on the future side, we've seen some open interest build up to 2% higher for this one. Housing finance companies bounced back today. So one of them was Dewan Housing, which rose 5%. In fact, closing the day at day's high to 6.3% higher. Bharat Forge is the other one. The stock was down in yesterday's session, some rebounds seen, and I was checking on the Bloomberg terminal. Looks like the volume for this one tripled today, so 5% higher for this one. DLF2 went up in today's session, so almost 3 to 3.5% gains for this. And Siemens also saw some action on the upside, some buying interest seen for this counter, 2.2% higher. And yesterday, where it was the day of HDFC Life, today SBI Life went up, so that insurance company saw gains of 2.2%. On the losing side, in the second half of the session, we did see some selling pressure coming by for Eros Media. That stock touched 52-week low in today's session. In fact, it was down almost 10 to 12% at one point of time. That's the intraday chart. It went down substantially. A bit of recovery, however, seen just in the last 15 minutes of trade. PC Jeweler was also down, one of the top F&O losers. And also something like Tata Communication, that's witnessed selling pressure. That stock was down almost 3.5%. Cadila Healthcare, we just discussed, 52-week low for this one. Result reaction for Godrej Consumer, disappointment on all parameters, volume growth of 1% seen from the company, and McLeod Russell locked in lower circuit of 10% today. And Tata Elxsi, which fell in the second half of the session, 3.5% lower yesterday. In today's trade, once again, that stock witnessed selling pressure and closing the day with cuts of nearly 3%, Neeraj.
Yep, so interesting day of trade, more so for the broader end of the spectrum, but you would have to say IT takes the cake as far as news flow and as far as the weekly performance as well goes. We'll get to that in a bit. Just bring up the turnover today, bring up the market breadth today for just a moment before we talk about the weekly performance.
The turnover has gone down.
Yeah,
F&O substantially because of course, there was weekly expiry. But NSE cash was, I guess, somewhere 33, 34 yesterday. That's fallen to 29.
Yeah, these days sub 30 seems to be a number which is subpar, to be honest. But the market breadth, I'm interested in that. While the indices were flat, did it worsen during the course? Yeah, the last 45 minutes of trade or 1 hour of trade certainly went down along with the large caps.
Yeah, and I think VIX also crossed the level of 24. I don't know if it's closing the day at day's high, but it did breach that mark of 24, which we were watching out for today's trade. So VIX volatility has been on the higher side, and that's been a concern. I think it just touched in closing around 23.98.
But the weekly performance, if we can pull that up for the indices, for the large caps first, and see what's moved and what's not. So it's been a flat performance. Mind you, it's a truncated week also, so keep that at the back of your mind. But 3 days of a trade, and look at what's happened to Yes Bank. I think that single-handedly takes the cake. But you have to give Britannia, I mean, there is significant move in Britannia as well. For an ordinary week of 3 trading days, if you ignore Yes Bank, Britannia, IT like TCS, etc., all of them stand out in terms of the falls that they've had.
And all result-related moves for Britannia, Yes Bank, IndusInd, of course, we are waiting by for the numbers, but that too has been a laggard in the recent past.
Yeah, and ahead of the numbers, I think HUL has corrected about 3%. So do watch out for this one. M&M, in line with what Escorts has also done, down in the session.
And Kotak touching live highs today. So
HDFC Bank, almost there.
Yeah.
So, yeah, the strong are getting stronger. Reliance Industries too, marginally higher in trade. What about the mid caps? Should pull that pump also for you. And again, I don't know, not too many losers. Actually, the one that stands out for me amidst all of this, I know Escorts would probably be another one, but Edelweiss Financial Services is now starting to get clobbered. We've been seeing this chalk and cheese behavior, right? Bajaj Finance at life highs. HDFC doing extremely well, and the slightly suspect ones which have got this ALM mismatch and maturities coming up, Edelweiss, for example, correcting.
Yeah, that's been under pressure. In fact, even Dilip Bilkon has seen a lot of selling on the cash side in the last few sessions, and that's 19%, almost 19% lower for the week. And ITBI Bank, these are all your usual suspects probably for the week. On the gaining side, you have Ajanta Pharma. I think that one stands out because the stock's not done too much, but the numbers surprised, and a lot of brokerages have been saying it could be a turning point. It could be a tactical buy on this counter from now, because I think they've outperformed on the domestic side of the business.
Otherwise, pretty standard stuff. The small caps very quickly and see what's, I mean, if anything has stood out in that index. Gujarat Alkalis was largely today's move, but PVR, I don't know if it's the weekend of Avengers Endgame, which did it. But I must tell you, I went on a Tuesday night and the theater was empty.
You watched the movie? I thought you were not going for it.
No, I went for it, but it was empty. I mean, maybe 20% occupancy. So it's not quite lived up.
You went on a weekday?
That. I went, but I went a day before the holiday.
Okay, all right.
So not quite living up there. Deepak Nitrite up about 2%, but just shows you how weak it has been. But the losing side, Gen Irrigation, Jet Airways. Just a small plug here. If you want to know what's happening to Gen Irrigation, do log on to our website, bloombergquint.com. There's a very nice article written by our colleague Forum on the kind of issues that Gen Irrigation is having with its debt. So do log on and read that article. But anyways, final thoughts from our experts. Shubham, to you first. Based on what we've seen thus far, I know you started the show saying that you would go short on the index. What is looking the weakest within the Nifty in terms of sectoral themes or specific stocks?
Neeraj, if you look at firstly the entire index, the breadth has not been very encouraging, even though it's not that bad day because we have a very neutral close. But net, the number of stocks which has seen short positions built today is higher than the long, so that's a negative factor. And from the day's high, we have seen a decent retracement also happening. So if you talk about sectors, I think the auto space minus Bajaj Auto, so all the other stocks might actually again come into selling pressure because most of the stocks have seen heavy shorts getting built, and now there's a temporary pullback, and then again, more shorts can get built there. So the auto sector will be something which will be very interesting to see next week because the pullback might again end, and we might see a decline coming in. And other than that, I think many of the mid-cap names are there, so not really from the Nifty space, but if I have to just choose one more from the Nifty, I think Axis Bank is one where there's a short-term breakdown happening, and we might see a decline of another 30-40 rupees there. So overall, it's a consolidation on the index, not a big-time negative, but I expect 11,600 to 650 getting retested again before the rally starts. So a temporary decline of about 150 points on Nifty is what I'm expecting.
Okay, let's see if the index actually tests that level again of 11,600 or 650. Aditya, what is your view for the next week?
So continues to be locked in a range of 11,800 on the upside and 11,700 on the downside. Even today, markets just took support at 11,700, making almost identical candlestick patterns in trade. Yesterday also we formed a doji. Today also we're forming a doji. So clearly tells you that there is indecisiveness right now in the markets. Probably if it breaks 11,700, even I'll go short for targets of 11,650, 11,600 on the downside. FMCG and IT definitely looks the weakest. Probably Britannia is weak amongst the pack. Britannia and Dabur both are weak within the FMCG pack, and TCS and HCL Tech definitely looks weak, followed by Tech Mahindra.
Okay, so that's the view coming in. Let's see how the markets pan out. Just for this week, we were just about flattish, no major gains and no major losses seen. And on that note, I would like to thank both our guests, Shubham as well as Aditya. Thanks a lot for joining us and taking us through your views on the markets, and have a great weekend. Well, with that, it's a wrap on this edition of Countdown. Goodbye from Neeraj and my side and the entire team who's put this show together. Stay tuned for more news and updates.